In this video, we analyze ETH versus Bitcoin, none of the content financial advice. This is uh, Bitcoin Galaxy over here on crypto pairs under cryptoweeklies.com. This is my website. The default view is just USD pair view, but we do have crypto pairs view on this orbital galaxy. The key idea with this is, again, if there is a pair which has been identified as a um, building saying that means it typically has been forming a set of lower lows and lower highs, structurally speaking. So that's why ETH BTC is in this zone over here, where the composite risk for holding ETH versus Bitcoin is 0.66 from the principles of opportunity cost, and mean reversion pressure is fairly low. Nonetheless, let's look at it deeply. Now that ETH did rally at the end of the bull market year of 2025, there was a minor rally for ETH from its Bitcoin valuation, which was less than 0.2, sorry, 0.02 to at one point at 0.04. So there was a 2x rally in the short term from April 2025 to August 2025. But in the larger scheme of things, this was nowhere close to even its even the 2021 highs or even 2018 highs. There were a series of lower highs. And the only good thing for ETH at this point is at least the 2025 low for ETH was higher than the 2019 low. That there is this one good argument for ETH holding some value over Bitcoin in a macro scheme of things. Unless if there are six more bearish once for ETH, this model predicts that by January 2027, it gets this major panic with respect to ETH BTC pair at the end of year 2026. This double bottom might be tested in the later half of the bear market. This chart is sourcing seasonality market techniques and trying to forecast the bull case and the bear case for ETH against Bitcoin. The time weighted average price model helps identify this is Bitcoin per ETH. Um, that's why it's in fractions. When one ETH just right now, uh, in terms of the current pair valuation is 0.029 Bitcoin. You can see that over there, the price of Bitcoin is 64K, whereas the price of ETH on the top over there, that's why and only in fractions of Bitcoin is available per ETH. So, nonetheless, going by the lens of time weighted average price based risk accumulation level, right now we are at gravity level 2. But historically speaking, I didn't know one we can get every single thing right, but nonetheless, directionally speaking, accumulating at this point rather than, let's say, when it's at risk level 3 or up, comes with a slightly lower risk than let's say when the price of ETH or valuation of ETH with respect to its Bitcoin there is higher than the time weighted average. Because the time weighted average valuation for ETH is rated at 14046. This is again that's where the price was in 2024 August time period. So not even the bullish seasonality for it in 2025 was even worse than again that and the point to transition was even worse than what it was in the bear case of the bearish case for the asset class crypto asset class started in 2022. So there wasn't any major recovery. I mean, you can see this happening in 2019 as well, whereas the pair into BTC pair kept on going low, although the market had a bottom in 2018. So it's not too irregular to expect. It goes up against Bitcoin only when there is this a macro bull market for the asset class. And then for the rest of the time, it forms a series of lower highs and lower lows. Coming from the valuation bands, right now, if you look at the lens in the regression based valuation bands, right now the pair is in this accumulation territory for this morning. Whenever this regression model then tries to account for future extrapolations as well. But right now, using the past data, this pair has deterministic constant division. Accumulation is not in the discount at the end of the bear market, like it forms when it escapes that blue line. The blue line for ETH right now is currently coming in at one slightly less than 0.0183. So that's valuation. So that would be slightly lower than April 2025. Going to the 20-week and 100-week and the 200-week SMA based identification where the price and the pair is right now. It's currently overextended. Although the price is the valuation right now is below 200-week simple moving average, below the 100-week simple moving, but it is above the at or above the 20-week simple moving average. So typically in the bear market, uh, this uh, area where the price momentarily goes above the green line is followed by a not so desirable outcome for it, where it crashes and forms a series of lower lows against the Bitcoin. So that's why there is this elevation of this risk level. And again, structurally speaking, it's right now not doing that well against Bitcoin. Just wanted to share what is available through the lens of the models. The gravity model, just looking at the same model through the lens of the risk levels right now. It is just from the fair value perspective or the time weighted average price perspective. The gravity score is 16 out of 100. That means risk level 2 between 10 and 20. And the market premium discount is there is a air gap of over 36% between them. In the current valuation of ETH is equal to 11.029. And that's time with analytics. So this these are analytics help identify where the player is, and if you are looking for in terms of the tabular view. So as we saw earlier, that this is in this structural capital sink. There is mean reversion pressure is fairly low. Denominated in Bitcoin, denominated in Bitcoin, and forward outlook for the next 23 weeks is about 6% lead back there. You can see this is the forward outlook is this low line. And if something worse were to happen, like the 10 weeks, they are case 11.021. If you want to ask, listen to it on the averaged format, you can ask the code here. This will provide the deep dive for the USD pair as well. Um, of it. And then going back to the main galaxy, uh, responding to it in form of all the keywords available over here. This most of the assets with respect to the Bitcoin are right now in lagging mode. That means there is negative return outside the same zone, whereas the the ones that are in but are in the leading sync zones are arguably the worst zone for an asset to be where the projected return is less than again, negative 5% on that means a bleed more than 5% is expected in the next 6 months. And the risk level size also greater than zero point 0.6. How this composite risk is calculated in the song here is at 1.73 through the lens of that SMA risk. And then see how this is calculated. Distance from the core means the higher the distance, and that means structurally speaking, it's um, when regression probability is heightened, but right now it's only regression probability is not that great. Don't say this one of the calculated, and then the return percentage is projected, and then percentage composite risk that we just saw mean relation probability is identified from moving average and then the average in projected momentum. So when the reversion probability is low, and if the asset is in like a leading same territory, that means the upward mobility or upward pressure for each. against Bitcoin is fairly low at this point. All in all, just an analytics information. It's called ETH right now. That comes as a cautionary tale in the next 6 months. Just wanted to provide what the data is suggesting rather than anything fanciful. We do have an ETH related galaxy as well over here, and right now nothing is bleeding against ETH. That means if we toggle and go to two galaxies at one point, we can see the difference between Bitcoin and how assets are the singular assets are shaping with respect to it. So, for example, over here, there are assets that BNB, which are actually accumulation going with respect to it, but not against Bitcoin. Um, Again, there is no leading sinks. That means no asset is on this -5% projected return and 60% is greater than 60% is with respect to each. That means right now, just comparing the two levels, we'll see that right now it's the Bitcoin's time to shine. If we go by another set of indicators such as let's say the identification of whether it's Bitcoin seasonality or each seasonality. This is again evident from uh, it's available under the stream app where this seasonality is very close to Bitcoin seasonality. Anything close or near or below 25% is Bitcoin season. Now this is at 28%, very close to the Bitcoin seasonality, and it has been going down and starting to favor Bitcoin all in all. And it is also evident from the place where Bitcoin is in the structure is speaking uh, in the golden breakout of the main crypto galaxy over here. Um, and also, if you want these kind of analytics in your uh, mobile app based format, we also have that on where we use now for everyone on Google Play. So then Android app, you can click on the link over here. It's to take you to this same Galaxy identification on the mobile phone. I think I understand these factors such as which people are using right now. Comparison, this is only mobile only analytics. You haven't launched on the website. We'll try to keep it on mobile or the mobile first approach. Also, these one single snapshot of all the indicators that the peak value here and within that market phase identification. And these were again rejects to identify again this without having to go through the app. Um, Bullish forecasts, bearish forecasts, time weighted average spread model for on the USD the AI mode that we had, educational AI search, and then much more available on this app. So if you like this kind of content, please do like and subscribe to stay updated. You can also check all of the YouTube related videos from the website, know about what this project is about. And again, look at it in the classical sense of lens, in a tabular format. We also have insights for not just crypto related content, but also assets, but also AI related stocks, how they are performing, what's their galaxy status. It's all cryptocurrency, quantum computing, Bitcoin related equities, how they are performing, and then crypto pairs as we saw today. With that, hope you enjoyed the content. If you did, please give a like and subscribe and hope to see you tomorrow. On that, Wednesday.